This is our Forex blog for April 15th, 2013, and these are our currency indexes. We actually compare every major currency, all of them together, all the dollar pairs, all the yen pairs, all the pound pairs to each other, and actually create a chart so you can visually see what the trend is. You can see the previous day's high. In other words, is the dollar stronger today than it was on the previous day? Is the euro stronger than it was on the previous day? Obviously, you can see it was trending up. You can draw trend lines on these. You can see double tops, double bottoms, flag patterns, wedge patterns, all kinds of continuation, trend continuation and reversal patterns. And underneath the chart we have the daily and weekly trend, and if you want you can also put our trend intensity, which by itself we call our currency index, and this is what we've done for the last 6 or 7 years. Bought the strongest currencies versus the weakest and sold the weakest versus the strong. By actually seeing the chart, you can actually anticipate and in many cases predict what's likely to happen in the future. Now, does this work 100% of the time? No. When it doesn't, you lose 6 to 10 pips. When it does, you make 5 to 100 pips. And so your average wins are significantly bigger than your losses. And that's how traders should focus on it. Don't worry if any individual trade works or not. It doesn't make any difference. You take enough trades and your system's 40 to 60% winning, and you have 2 to 5 times bigger wins and losses, you're going to do well. You can also use trend lines. I have actually automated a system that looks at trend lines I draw, and then when those get broken, whether I'm sleeping or awake, it puts those trades on and sends them to the institutional broker that I use. Now, we don't have this for our retail clients because we don't have execution with MetaTrader brokers. However, you can set alerts, cell phone alerts, email alerts, and get notified and take these same kind of trades manually. So let me just start with giving you an idea on how to do that. You can build up, in many days, I've been experiencing 60 to 100 pip wins from trend lines, and I'll show you today. Before one of my other systems got triggered, I was up close to 200 pips today. So one second, let me bring that up. Okay, here's the euro dollar, and I have it on a 30-minute chart. I drew this trend line and this one, and if the market went kind of sideways and broke out to the upside, I was going to buy. If the market broke down underneath this trend line, I was going to sell. Now obviously this one didn't generate too much profit, but it fell from 83 down to 53, so my trailing stop probably only would have made 5 or 10 pips on that one. You can see sometimes when these trend lines get broken, like this one, it was in a nice little wedge pattern. It would have got in this one here around 150.90, and it fell to 149, pretty much 50. So absolutely huge straight down move. And again, you can make a living just trading trend lines. This is one that I put on that I was kind of hoping the market would kind of go up a little bit more, slowly go up. I like it when it kind of goes sideways, breaks the trend line, then falls. This one already fell 20, 30 pips before the trend line got hit, but you can see when that got hit, 53.60 all the way down here. Nice, I probably netted 40 or 50 pips on that one alone. So trend lines are phenomenal a way of trading. And until you learn some of our more advanced methods, you can use that as your primary bread and butter method. So let's look at how to use our currency meter or our currency indexes to find the best trades. This orange level is what the point of control is for the previous week. It's the average price of the euro for the previous week. And last week, the average price went up 186 pips from the week before. The dollar fell last week. So if you were looking to buy one of these currencies, it would be the euro. If you're looking for patterns to sell, it might be the dollar because it fell last week. The pound went up 161 pips last week. This is the hourly moving average, and this is a 15-minute moving average. So basically, in a nutshell, let's go and look at all of them together, and we'll scroll back. This allows us to kind of simulate trading. If you look at it earlier in the day, let's say by 4 a.m., currencies that you want to possibly look for buys are the dollar because it's above the hourly, it's above last week's average price, it's above the previous day's average price. It's up here near the previous day's high. It breaks out of that area here. You might have got into a buy of the dollar. The euro earlier today is in a chop zone. Anytime it's between the hourly and the point of control, whether it's a weekly or the daily, it's likely to be very choppy. So earlier you might have avoided that one. You can see the Swiss daily and weekly trend is up, found support at the previous day's low, so you might have looked to buy that one right there. The Australian is very weak. It's underneath the hourly. It's underneath its 15-minute moving average. It went down and tested the previous day's low down there. The daily and weekly trend's extremely weak. Same thing with the New Zealand. It's very weak. CAD, very weak. Pound, you can see the daily trend's up pretty strong. It's in this kind of chop zone here, so you're likely to kind of lose money in this area. It's likely to go up, down, until it breaks out. If it can break out above the previous days and weeks point of control, and especially yesterday's high, you're likely to get a very good move in the pound. Now if it doesn't, and it comes down underneath the hourly here, you want to look to sell it. Even though the longer term trend's up, it's likely to work its way down to the previous day's low here. So again, ones that we're looking for buying: Swiss, dollar lightly, euro looks very nice. This one looks like one that we want to sell. New Zealand we want to sell. And then basically all we do once we identify which currencies, we wait for entries and then we get in. It's that simple. You want to buy the strong ones versus the weak and sell the weak ones versus the strong. I like getting into a currency when it comes up to the hourly and can't get above it, and then I would look to sell it. I would sell this Australian later in the day against whatever currency is strongest at the time. It's that simple. Here the Swiss is going up right at the previous day's high, and if it breaks out over that high, you could consider buying it. Right here. Which one's the weakest? Well, I would prefer to be in a currency that's underneath the previous day's low. So the CAD's extremely weak. The Swiss is very strong. So at 5 o'clock, if you want a high odds trade, not only in terms of winning percentage, but also one that's likely to give you 2 to 3 times or more, more pips than you're risking, we would actually sell the weak CAD versus the strong Swiss. So let's bring that up. So we're looking to trade the CAD Swiss to the downside. Now the only thing to be aware of when you look at this chart is it's near our lower 2.0 band, which typically is where price reverses, as you can see here and here. So it's a pretty low odds trade right there. I would hope to have another pullback up, kind of like what we had an hour earlier, and then look. So you need a little bit of patience here. We're going to wait for a little bit of a pullback, or if it goes sideways for another half hour, breaks down, you can take a shot at it, but it's a lower odds trade. All right, so you get a pullback right here. If it goes underneath this low right here, you might say you want to go short. Put your stop just above the high, so you can see you're risking less than 10 pips. Now keep in mind the lower band's right here. It's likely to, at some point, maybe within 5 to 20 pips underneath there, bounce and come back up. All right, so you might exit this trade down, or at least half of it down here near the lower band, and you got short right here. And as this is why we use these bands. All right, it's going a little bit lower. We get out of our second position. If it starts to reverse, you might get out of the second half here. So you made about 12 or 13 pips on half, and maybe only 5 or 6 pips on the other half, because this was already down too far at the lower bands. The reason we have these bands on there is so you can be very careful getting short. Basically we trade with the trend until it moves statistically too far. When it's underneath or above these bands, it's gone too far down. When it's at the upper bands, it's gone too far up. It's that simple. So let's go try to find one that's more reset. Here you can see the CAD's working its way up here. Oh, actually, we already took that trade. Let's find another event to take a trade in. Using these currency indexes, you can do all kinds of things, like have trend lines on it. You can see the Swiss broke out from below to above the previous day's high, but it really wasn't able to get to go higher. That's a pretty big reversal sign. I prefer shorting currencies when the daily and weekly trend is down, but you can oftentimes get short right here. It'll work its way down to the hourly, and you can make 20 or 30 pips on a counter trend trade. When a currency goes underneath the previous day's low and can't stay underneath there and comes back up, that's also a very bullish place to be looking for buys. So let's scroll forward and see kind of what happens. I'm going to draw a regular trend line on here so that they exist and continue. You're looking at the Australian is down too much, so is the New Zealand. It's at a very likely reversal area. You can see the yen can't get above the previous day's high, can't get above the previous day's high. There's nothing wrong with looking to do a counter trend trade if it breaks that trend line. You know, before with our currency meters, you can't draw trend lines on them. So this thing broke through the trend line to the downside. You can see the pound looks like it's about to break out right here. The Swiss is still strong, and it's above the previous day's high. So you could take a look at a Swiss yen buy around 730. Here's the Swiss yen chart. And remember, it was around 730 those trend lines broke, right? So that's right here. And this is underneath the hourly moving average. You can see it made lows earlier in the day that it's really not able to go underneath here. And when it breaks out to the upside, you can see it went right back to the hourly moving average, which is oftentimes a great profit target. So you made probably about 25, or no, well, let's find out the exact amount you made on this. You would have bought the breakout right here, 34, it went all the way up to 69. So over 30 pips profit while risking about 10. And again, that's the key. And it was very predictable by just simply watching those trend lines. And when a currency is not able to continue up, when it's, you know, kind of failing to go above the highs, like with the yen, when it breaks down, you look for a short. Let's look for some other type of patterns here. The CAD's down a tremendous amount. And I like to see when a currency comes down and can't break the lows. When it forms a double bottom, it's a relatively safe place to get into a trade. You can see this one's making a counter trend move up. I prefer it when it hits the hourly moving average. When it stalls there and can't get above it, like right here and here, great places to go short. This one's a few pips away from it, so it's not quite as good. There we go. Good place at 8:45 to look to sell the CAD. So what would you want to sell the CAD against? What currency's strong? Well, the yen's been trending up all day, and it's finding support here at the hourly moving average. The dollar has pulled back underneath the hourly. The euro is looking really strong here. I would look at, and it's also, you know, just broke out above the previous day's high. I would personally look for a euro CAD short at 855 right there. Euro CAD, 855. Actually, euro CAD buy, sorry. So at 855, we're looking for a euro CAD buy. As you can see, pulls back a little bit more. You might have went long when it went above that bar's high, and it only went up about 12 pips. But you can see by using the currency index, you can anticipate trades. Now, most of the time, I'm not using 5-minute charts to get in. I just use it for class purposes. You're better off using a tick chart or a range chart. Let's take a look at this Euro CAD. I don't trade this one that often, so let's use a 4 pips per bar range chart. And you will be able to see a much better entry on a range chart. That was at a little bit after 8:55. We're looking for a buy. You can wait for the first bar that closes up, and then usually I put my stop a few pips underneath the low here. Let me use my drawing tools. And you can see by getting into this trade right here, your risk is very little. And more than likely, as this thing works its way up and does up, down patterns, you're going to probably get out of your trade right here. You're in the trade around 42, out of the trade at, let's say, 52. You know, you would have made 7 to 10 pips on there, or risking less than that. You can see the win is bigger than your risk. And this is mainly for people that like to scalp and, you know, want to take very low risk trades and find, you know, high probability patterns. You can use our currency meter on any time frame. Here's the 5-minute you can see by default, but if you want to see what the 30-minute looks like, you can certainly do that. And you can see longer time spans. You can spot significant trend lines. You can also spot significant breakouts. Whoops. For instance, right here, when it came up to this level, and Sunday it broke out above it. That was very significant for the euro. As long as it's above basically last week's point of control, you want to look for buys. You know, when it broke out again right here, pretty high probability. You would want to buy that versus whatever's weakest at the time, which more than likely was the Australian. And you can have many of these up. You can watch multiple time frame currency indexes. And when you see little pullbacks that aren't able to, and you can spot longer term trend lines here. It was in a nice little wedge pattern, and Sunday night broke down. These are the kind of trades when you see pattern-based trades and low volatility sideways. It's in the direction of the trend, which is down. These are no-brainer trades. The Euro Australian buy last night would have probably gone up, I would guess, without looking at the chart, 50 to 100 pips. Euro Australian last night. When that broke out, it probably triggered somewhere in this area right here. So 24.75 up to 2,500. 75 pip moves. I was a little bit off in my predictions. But the point is, whether you're a short-term scalper and you want to catch a ton of 5 to 20 pip moves, or you're a longer-term trader who wants to be in the best currencies and use trendline breaks when multiple currencies both break out of wedge patterns, double tops, double bottoms, sideways rectangle consolidation patterns, you tend to get big moves. And when they happen, if you're a longer-term trader, you can catch these 50 to 150 pip moves.